All right, all right, all right. Here we are. Let's go. Market's ready to open here in a couple minutes. Glad to see we got a bunch of people in here with us. Looking forward to a good day. Thanks for showing up this early in the morning, ready to watch the markets. Let's come in here and change this around a little bit. We've got S&P 500 up in the left corner. We've got the Dow down in the Dow in the right corner, top right corner. Nasdaq bottom right. Russell bottom left. We're going to watch all four markets. Pull up our news. This is the news. This morning at 6:30, we had some good news. Actually, news, not necessarily good news. We had some news that moved the market. So personal income month over month. The previous was zero point 0.3. The actual was zero point 0.2. Consensus was going to be zero point 0.3. So that's bad news. Personal income went down. Personal spending went up. So previous was zero point 0.5. Actual was zero point 0.8. Now, personal spending, people are spending more money than they're making. So that's not good, but it's good for businesses. Businesses make more money when people spend more money, but they're not spending very much. Okay. The other thing is core PCE price index was 2, actual was 2, so there's no change there. But that was at 6:30 this morning. It's now 7:30, an hour later, and we've got 7 o'clock. We got Fed Collins speech at 7 o'clock. That was a half an hour ago. 7:45 Chicago PM. Not going to really move the market too much, but it might do a little bit around 7:45. And that's it. The rest of the day, we've got some mortgage rate stuff, some more mortgage rate stuff, some T-bill auctions. Nothing really going to change us too much around the rest of the day. So it's going to mostly go off of what happened yesterday and what we had continuation of yesterday, and then what this personal income stuff came in today, which was not really all that great of news. So we can kill that and just go off of patterns and trends today. Not sure we got a real bullish day. You can see the market right now currently is sitting below the VWAP. Again, remember the VWAP is like it's a volume weighted average price. And so it's just the average price of the market weighted by volume. And so it'll go up a little bit, it'll go down a little bit, but it's pretty much trails along behind the market for the most part. But it's like a rubber band. It kind of pulls the market back and forth to the VWAP. So if the market's trading below the VWAP, it'll generally, depending on how strong the fundamentals are, pull it back towards the VWAP. If it's above the VWAP, it'll pull it back down towards the VWAP. So we're always looking for that pull back towards the VWAP. But the reason I like to watch all four markets simultaneously is because we generally have a leader. So what happens is these markets all travel almost exactly the same. And then what happens is that, as time goes by, price and time, one will take off and go first, and then the next one, or two of them will go at the same time, and then we'll have followers or laggers, is what I call them. And it's the lagger that you want to trade because it'll generally follow the other leaders of the ones that take off and run first. So it's kind of like an indication of which direction the market's going. It's kind of a little trick that I like to do. And watching the four markets and then just trade the lagger. We can do that in other markets too, like corn, wheat, soybeans. They all kind of travel the same usually, but even down in other families, because we have things like soybean oil, soybean meal, and soybeans. Kind of a family right there. And they all travel almost the same, but there's oftentimes a leader that'll take off and go first. And so the leader is usually the retail product. And the retail product in soybeans is the soybean oil. So oil generally leads the market and then the rest go. You'd think it would be soybeans, but it's not. It's soybean oil that is generally the leader. Not always, but sometimes. Okay, is that the opening bell? Nope, not yet. 29, we got 1 minute till the bell opens. So they're getting a little excited right here. The pre-market, look at the market move a little bit right here before the bell. 7:30. Oh, there's the bell. That's the bell. So 5 seconds ago, that's the morning bell. Look at the Nasdaq taking off. The Russell's taking off. It's breaking that yellow light to the upside. We've learned in the past, right, that if we watch those yellow dots, oftentimes in the morning bell, if the market's going to be bullish or bearish, it's going to take off and move in those directions in particular. So being ready for that. But the problem is the market oftentimes goes up and then it flips and comes right back down. So be careful on this morning bell. Oftentimes like to wait for the first 5 minutes, sometimes 10 minutes, even sometimes 15 minutes into the market before we start getting serious about trading. We want to kind of have a bracket there of the highs and the lows as the market whips back and forth in the morning as all this indecision. A lot of people see the news as positive. Some people see it as negative. You see positive news come out and the market fall. And you're like, why did the market fall with positive news? Well, it failed because people felt like the news wasn't positive enough. Okay, so you get positive news and the market falls because it wasn't positive enough. Now look at this. We've got divergence between the Dow and the Nasdaq. So the Dow tanking, Nasdaq rallying. Why is that? So we got different markets. Of course, the Nasdaq is the top 100 in the Nasdaq on the Nasdaq exchange. The Dow kind of crosses between the New York Stock Exchange and the Nasdaq. It has a little combination of both. But the Nasdaq is strongly influenced by the tech industry. So tech seems to be doing good on the Nasdaq right now. So probably if you pulled up Apple and Microsoft and Netflix and Meta, Google, those types of markets, they're going to be doing well right now because that's what's pushing the Nasdaq higher. And so then we've also got the Russell. Now, yesterday the Russell took off like crazy, and those are the small caps. And the small caps, they were doing really good yesterday. The S&P just kind of slowly rallying there, taking off. If we wanted to take a long position, we could go in there and try and take a long position on this pullback and see if we don't get a continuation. But where the Dow's kind of fallen right here, where we got the two markets going in total opposites, that's not good. Remember, if you were with me on Monday, or if you went back and watched the Monday review, watched the Monday class, we had that same problem. And we took a number of trades on Monday and ended up, basically scratch day. We were green by about 20 bucks is all we made on Monday because those markets kept going in opposite directions and we couldn't get any convergence between the markets and get a nice flow. And then Tuesday came along and we had a real nice flow. All four markets were doing the same thing. We had a really good day. Wednesday came along. We had a good day. Thursday, that's today, right? So this week has been kind of a crazy day, crazy week. We've had good days, and we had one day where everything was out of sync and we couldn't make any money and nothing would trend right. So we just need an opportunity to get one good signal and one good trend, and we can make our money. Now, we're going to just kind of focus on keeping very simple in this strategy. So we're just going to look for an ABC pattern. We just want to see a market that rallies, and then we want to see a small pullback, and then we want to see a continuation of that rally. And that's what we want to see is a little A, B, C, D pattern. We're just going to trade from C to D. And that's what I'm kind of emphasizing, that for new traders and just getting started, don't try and do all the fancy, crazy things. Don't try and jump in on these wild and crazy markets. Sometimes it's a little dangerous to jump in on these markets. Like this NASDAQ, you're looking at it now going, why aren't we long, Lan? Why aren't we long? Oh my gosh, you should be in this market. Why aren't you making money hand over fist? You can do that. Go get your own track and trade. I'm not telling you how you should trade. I'm telling you how I trade. All right. So this is how I do it. And what I do is I like to kind of watch this stuff play out. There's lots of opportunities. I mean, there's no shortage of opportunities to take trades in these markets. There's no reason to jump in the fray and right off the opening bell. You can. The opening bell's fun, and I'll do it sometimes. But for the most part, I kind of like to let that kind of go by and see what goes on because I want to catch just a nice trend. I'm a trend trader, momentum trader, and I'm looking for the market to give me an opportunity for entry. And so we need to create the AB first, A, B, a little bit of a pullback, and then I like to trade from C to D. So, and if the market's too big and crazy, I don't want to trade. I don't want to jump in there. Look at these bars, these price bars down here. That one price bar, that's $700. Now, my strategy is to trail one price bar back. So I like to trade higher highs and higher lows. So if the market's making higher highs, the market's in an uptrend. If it's making lower highs, then that's what I like to see, lower highs and higher highs. And then I like to see a little pullback with small bars. I want small bars where that bar is tiny as it rolls around and then goes from C to D, and I catch those bars. So I don't like to trade these great big giant bars because I hold my stop one price bar back because I want to get out if the market changes from bullish to bearish, which would be lower highs and lower lows. And so if a bar is $700, I don't want to hold my stop back $700. That's way too much for me, for my little account. I only have 25 grand in here, right? We're only working with, what have we got? $27,000. So $27,000, $700 risk is too much for my little account. So if you want to start off with a smaller account, even a lot of guys in the futures market, you can start off with a lot smaller. You can start off, you can go down to the mini accounts, which are 10 times smaller than these. So just to keep that in mind, if you wanted to start off with even a smaller account, you could, but that would be $75 instead of $760. And that would be okay. Then we could play, a little bit more loose. You don't want to play loose because you can still lose money even if it's $75. Still a lot of money to, I don't want to lose 75 bucks. That's a lot of money, but at least it's not $760. So we have to wait for the right opportunity and wait for the right setup so that we're not taking such giant risks. So this market's rallied up. Okay. It's made a nice rally. It's pulling back. It's giving us exactly the pattern we want. It's just really big right now. It's really dangerous, but we could take that. The way we would do that, come in here with quantity one, we could drop that in there, and I'm going to drop in with an auto trailing stop. Now notice that I use the QOCOs. So this thing should, what we want to see it do is we want to see it rally and start to increase in value once again off of this little pullback. I'm not looking for a reversal where it goes down. I'm looking for it to pull back and then start to rally once again. Okay, we're long. And so my stop, still going to be a pretty good size stop here. We're going to put that in. Oh, I'm already down 160 bucks. I want to see that thing rally right now. Come on, there we go. Okay, so my stop is going to go back about those yellow dots. All right, so this is a big move. If it doesn't go, we're going to take a big hit because this is a big market and it's a dangerous time to be trading right here off the bat. But we want to kind of catch this ABC and then see this market increase. If we can get our stop moved up to break even, okay, we're in the green a little bit. It's pushing forward for us a little bit, but we need it to go. I don't want to see it pop back and reverse us. Okay, there we go. We're up 200. Now our goal is $500. So I'm going to add an OCO in here, and I'm going to set that target out there at $500. So we come in here and we're going to say if the market gives me $500, which is right there, we're done for the day. So our goal is just $500 in these classes, and I don't want to take any loss on here. And it already looks like I don't like what I'm seeing because look at the Dow. So I'm going to come up here and put this at break even right here. If it comes back and stops me out, I just want to get out without a loss. So 20 bucks. The problem with that is now it could take off and go and leave us behind and make us feel bad. Don't want to take too big of a risk, but also I pulled my stop in very quick because I was scared with that Dow dropping like that made me nervous. See, we could have stayed in that thing. I came up too quick. I was trying to show you I didn't want to take a loss on this nasty opening bell market, and now I'm missing out. Now I got FOMO, fear of missing. Ah, crap. Things going in our favor. We could have been up already, and I just took my stop up too quick. That happens sometimes. But I started seeing that Dow drop, and this was starting to drop at the same time, and I saw that, and look, the Russell's starting to drop. Now that's why I hate it when they go in opposite directions. We'd have been up really good right there if I wouldn't have got stopped out, if I wouldn't have got nervous about that other market. Now watch it go to the moon. Pulled my stop in a little bit too soon, just a little bit too quick on that. Pulled the trigger a little bit too fast. Yeah, it even happens to me. I'm not perfect. But I saw that other market start to fall, and I was just worried I was going to take a big loss, $200-300 loss on that. That's such a big market. It's a little scary to trade right out of the gate. So look at how the Dow come down and bounced off of that VWAP, turned right around, came down, hit the VWAP. Look at the Russell. It's falling like a rock. Holy cow. We were looking at the Russell thinking we wanted to be in that thing. We're feeling bad we didn't take it off that morning bell, right? Again, if we draw our dollar calculator in there, how big was that? If we went off that course, that bar come back and would have stopped us out. But that was a $350 move. It's a much smaller market. That's our smallest market. So it's a little bit easier to trade because you're not risking quite so much on that first entry. So I'll see it is pulling back. It wouldn't have made our five. It would have come right up, got right close to our $500 and fallen back, made us feel bad anyway. But at least it would have. Now it's pulling back. Now it might push higher. It's another opportunity on that little pullback we could have got in anticipation of the rally. I think that the Dow is going to come down and turn and rally once again. So we'll watch that. Look at momentum. Momentum's starting to drop as it starts to fall, or not momentum, volume. So we're losing volume to the downside. That's bullish actually, because if you start getting less and less traders as the market falls, then that's a signal that that's a weak downtrend. But we're getting the same thing here in the Nasdaq. The Nasdaq is starting to fall. The market was going up, but the volume was going down. So that meant the trend was weakening to the upside. No more volume coming in, no more traders as that market was going up. So now it's starting to fall. Now we've gone and broke below the VWAP. So now the market feels bearish, not bullish. I thought we might get that ABC. So the first green, the red, and then the pull back up to the upside. I thought we might have a 10-minute video this morning. We hit our $500 right off the first 5 minutes, but that didn't happen for us. I got a little bit scared as that thing started to fall on the Dow and thought we were going to see a reflection on the Nasdaq. So I sucked my stop up in there. We could have had a little bit of money here. Not quite the 500. It didn't go to our 500, but now it's pulling back and it's stabbing those yellow dots. Oftentimes what we'll get is we'll get a little rally. The market will pull back. It'll stab, put two bottoming tails through those yellow dots, and then it'll turn and take off and start to rally once again. So this is another opportunity to take a long position if we want to try it. Oh, I'm trading the wrong market. Here we go. Back to the Nasdaq. The reason I don't like this pattern, this setup, is because every single other market is going down. So I put a stop in for a break above the previous high. It'd be the first green bar to make a new high if it would turn around and rally. It's got to stay above those yellow dots though, and then anticipate a continuation of the uptrend. But look at everything else. Everything else is falling like rocks. Nothing's going up. So again, it's making me nervous to try and take a long position off of the Nasdaq. Again, being such a big market, our stop would be a big loss if we took it, and then we start trading the smaller markets. It would take us forever to recover our money. Just wait and see what's happening as they push it down through that average true range, the Nasdaq. Usually my rule is if it breaks below the Nasdaq and I get a yellow arrow, a down arrow to the Nasdaq, see, I'm trying to go long right now, and it's holding right here. It's holding it's holding the average true range. If it breaks through the average true range and holds below the average true range, I get rid of my long position. But right now it's still holding at that average true range. So if it turns and starts to rally again, we'll go long. I'm only going long with a single contract, so it's not too bad. It's just that the market's so big and the bars are so big that our stop would be a long ways back. It'd be a three right now, even it would be like probably a $200-300 risk on that market. Okay, we're long again. We're long again on the Nasdaq. Now we got to see volume come in. So we're going to come in, and I'm not real thrilled about reversing on this one. We're just going to put our stop in there. That's going good for us. We're up $265. So I'm going to come in here, add my OCO, bring that in here. I want $500. That's my first whack. Okay, 490, 500. There we go. If it hits that 500, there, $555 with a single contract. So we got nervous, a little scared on the first one. We took the second one, the second rise out of that red bar. We're up $550. We're done for the day. That's it. We don't need to trade anymore. Probably just give it all back. Now we could. Market's still moving and it's shaking, and we're still in that first 15-minute time frame. Not even had 30 minutes go by on the day. We're up $555. My goal for the day is 500. The way I run my strategy is if I take my 500, if I get 500, I can reevaluate and decide if I want to go for another 500. If I do, my max risk is 250. I don't want to risk all 500. So if I lose 250, that would be my stop, and then I'd lose 50% of what I have. Then I'd have to stop. But I can continue trading now, trying to get another 500 or 250 is usually what I'll do. So now my next goal would be $250, and I'd start trading some of these smaller markets. I don't want to trade the Nasdaq; it's too big, and so it would take away too big of a position size oftentimes. So I would trade one of these smaller markets like the Dow or maybe the S&P or the Russell, and then I would go for 250. So my next goal would be 250, and my risk would be 250. If I hit 250 and lose it, then I would stop, and I'd have $250 on the day. But if I hit my 750, then I might go for another one. And that time I would go for maybe 100 and try and get up, kind of push it up there and try and see if I can't push towards, look at this, it's now rebounding on me. Good thing we got out. We could try to go for a big, long, oh, I'm just going to stay in, Lan, and just trail my stop until I go to $10,000. I'm going to be rich, rich, rich beyond my wildest dreams with one trade. That works sometimes. And if you would have done that yesterday, I got stopped out with a $500 profit, and it would have kept going probably $2,000. It was a good market yesterday, but today it was the right decision. We got out with $500 and we're done, and I'm not going to go for another 250. We might. We've only been trading here for 20 minutes. This has only been a 20-minute live session, so we might just sit here and watch the market for a minute. Maybe we'll take another trade or two here if we get a perfect setup. But right now we've reached our goal. We're at $500 and we can be done for the day. Let me give you a little more information here. We'll watch and maybe take another trade here in a minute. Let's watch and see how things turn out. But look at the market fall. Let me give you some give you a little idea who I am. First of all, I'm Lan Turner from Trade Mentors. So if you want to visit my website, go to tradementors.com or go to lanturner.com. You can go to either one. Just go to my name, Lan Turner, lanturner.com. You can see me online. I have a whole bunch of information over there. If you look down in the comments of this video, I have a link tree. You can click on my link tree and get some free stuff. I have free trading stuff over there. Okay, so that's who I am. Just give you that little banner for a second and let that finish. So we watch this market and see what else is going to happen. Now look, the Nasdaq came right down, touched that VWAP, bounced off of it, rebound. Now it's going to test it one more time as it breaks through the average true range. So that market had that first little rally, and now it's starting to go sideways. We're not getting any real good trends out of it. Now here we go. We're getting a rebound on the Dow. The Dow made that new bottom. So we got lower highs and lower lows. Okay, so we got a natural trend line coming along here in the Dow off of this peak. It's coming down like this. Now it's going up and it's testing that trend line once again. Now, I don't like to get in on that first test and the first break of that trend line. I like to wait for it to break the trend line, get 3, 4 or 5 bars. I like 5 green bars, 4 green bars, and then 2 small red bars. And then that's my signal for entry. That's my AB, the 2 small red bars back, CD, and then that's where I get in for the next CD leg. So that's what we did here on the Nasdaq, right? It came back, created the red bars, broke the red bars, first green bar to make a new high, and that one went up and gave us $500. So that was our trade. I didn't try to get in high and sell higher. That's not something I like to do. So let's put this up here. We're trading in the futures market through Chicago Mercantile Exchange. This is not the stock market, although these are stocks. These are stock indexes that are traded in Chicago on the Chicago Board of Trade and the Chicago. These are all in the Chicago Mercantile Exchange. So we trade out of Chicago. Totally different world, totally different program, totally different thing than the New York Stock Exchange. We're not trading the stock market. This is out of Chicago, different exchanges. So we have different rules. So there's no pattern day trading rules over here. You can open up your account, we'd like to say, with $5,000. We have mini accounts in here. So these are all, or these are minis. So these are for experienced traders. But if you want to, as a beginner, you can open up your account with $5,000 and trade the micros, and they're 10 times smaller than this. So you're not taking big risks. You can do proof of concept. You can trade real money with real small size and get used to it. And then you can move up to the minis. So there's no pattern day trading rules. You don't have to open up with $25,000 over here, and you can trade as often as you want. You can buy and sell all day long. There's no rules. There's nothing that says you can't do that with a small account. So that's why we like these markets over here for day trading. A lot of people are like, oh, I want a day trade, but I have to have $25,000. And that's the minimum. You have to have actually 30,000 to get your, because if you fall one penny below 25,000, they shut down your account. You can't trade. And if you trade more than 4 times, 4 day trades in a month, in a week, they take your account away from you for 90 days. Then we don't do that over here in Chicago. All right. So again, for those of you who are interested, my platform is Track and Trade Live Futures. You can get a 14-day trial at www.trackandtrade.com. So run over there, get you a copy of this software. It's for trading futures. It's not for the stock market. Of course, Track and Trade, we have a stock version as well. So if you want to trade stocks through the Track and Trade platform, you can. But go get you the futures version. Get the 14-day trial. It's completely free. No credit card required. No commitment. Nothing. And it's live streaming quotes. It's not delayed. So go get that over at Track and Trade, and then hook it up on your computer and come back and meet me. I don't think I'm going to be doing a live stream tomorrow, which is Friday. My next live stream will be on Tuesday because Monday's a holiday. So next Tuesday, that'll give you a chance to get familiar with the software, watch some videos, learn a little bit about it, and then come back here on Tuesday. And Tuesday morning, I'll have another live stream and we'll go through and we'll trade again together. And you can have your software and you can watch me and follow along. And I'll teach you a few things. Chat in the live chat for me, and I'll know that you're here. Be nice if you're here watching, go ahead and say hello in the chat stream. But the bigger thing would be to go down there and hit that little like. Let's see how many likes we can get on this video. But go hit the little like button, and that helps tell the algorithm that this is a good video and to show it to other people, because the more people I get to come to these classes, the more often I'll do them. All right. If nobody's showing up, then there's no point in me come do them. So hit the like. And even a better thing than hitting the like is go down and make a comment. Because if you'll make a comment, then YouTube's like, oh, wow, this must be an important video. People are commenting. Oh, look right there. We're getting a good signal as we cross that yellow line on the Nasdaq. We're getting bullish now. So that if we get three nice new bars, 2 red bars, we'll look for an ABC reflection up. Look at the Russell starting to run. So we're getting a nice ABC pattern here on the Russell. We're just looking up here, testing, breaking this previous high. So we like to bracket these highs and lows for the day. And then this is our channel. So we kind of look for the market to break out of these channels from the high and the low for the day. So now we'll see if we're going to go bullish. It's going to go up there, test that high. If it can break and hold above it, I'll look for a little 2-bar back, and then we'll try and take another ABC long. That's what I would do on that one. So go down and leave a comment. And you're like, well, I don't know what to comment. Just say hi. And then that'll tell the algorithm that there's people who are engaged in this video, and we'll get this out to more people, and we have more people in our group. And if we get more people in the group, I'll come and do them more often. So subscribe and ring that bell. You got to ring the bell because you don't know when I'm going to go live. Try to go live in the mornings, but you don't know. I've got some plans. We'll do some live afternoon sessions too in the stock market and analyze some stocks as well. So we'll do a little bit of both. So ring the bell so that you get notified. So subscribe and ring the bell so you get notified every time I go live. I try to advertise the live. I'll try and put it out there and say, okay, I'm going to go live tomorrow and specify the time. That way you'll get notified, a good 12, 14, 15, 24 hours ahead of time if I know I'm going to go live the next day. and then you can be in here with me. But you got to ring the bell. If you don't ring the bell, then YouTube won't notify you that I'm going to be going live. So I got something good for you here as a free gift. Not free, but almost free. Darn near free. Subscribe to Pit News Magazine. That's my magazine. So I got you a code LAN Live $1. So if you use that code, you can get a whole year's subscription to the Pit News Magazine for $1. So run over to pitnews.com. It's regular $40 a year, which is still a bargain because this thing is a really cool magazine. Write all kinds of great articles, and they're not just generic articles. These are articles specifically written around tailoring towards, for the most part, day trading, but trading and strategy. So it's a strategy magazine. We have lots of strategies built into the magazine articles, and that's what they are. Lots of graphics, lots of examples and charts, and really cool magazine. So go over there and get that. Pit News Magazine, 12 months for only $1. Cancel it anytime. So you can go in, subscribe, and then immediately cancel it if you want to. You'd have a whole year, and at the end of the year, they wouldn't even charge you the next year. But I think that you're not going to want to cancel once you see this magazine, because it comes with a lot of audios. I mean, we put audios in, so it's actually an audio magazine where you go through there, and the audio magazine gives you, so you can listen to the articles. You don't just have to read them. So it's really cool. And it also has some videos. Once in a while, we put videos in there to accompany the articles. So you have videos, articles, and you can read it as well on audio. So it's a full multimedia magazine, all for $1 for an entire year. And it's all based around strategies for trading. It's really cool. So go get that. And what else have we got in here? Leave a comment, and then just, of course, my link tree. Oh, I got one more thing I can show you in here for fun. This is my book. If you want to go get my book, this is my book on trading. It's 280 pages of how I come about with all my strategies, the ABC patterns, all the different patterns, all the different rules. You can get this out on Amazon. Just go out and search Lan Turner on Amazon. This book will come up. And I try to keep the price really low. Oh, look at this. We got the Dow's getting ready to break above the VWAP. So we got 4 green bars. If we got another red bar, we got a couple. Oh, look at this. The Russell's giving us an ABC. So we got a nice rally on the Russell. The small 2-bar pullback, red pullback, that's our little pullback. Those are our bullish signals right there. So we could get long on the Russell right now and anticipate a continuation of the uptrend. We got a flag right here on the Nasdaq. So these are all things I teach in my book. So if you want to go get my book, took that off the stream. So here we go. So the Russell is coming in here with this little pullback. So that little flag right there is the perfect setup. But it looks like it's getting ready to fail. We needed that thing to push higher, and it's not doing it. Here's another flag. We call it flagging when the market flags like that. So that would be a place to get into the market as it pulls back. Higher highs, lower highs, and then it makes, so we call it flagging when it makes lower highs, and make this a little bigger so you can see it. See how that pattern's coming in there? So it's making higher highs and lower highs, and then it pulls back and makes lower highs and higher lows. So that's called a pennant formation, or I call it flagging. We call it, the market is flagging. And then as it breaks above those previous highs right there, that is your signal for entry. That's where we would get in and take another long position. Okay. So that would have been a good place to get in, and then you put your stop 1 bar back. So this is where your stop would have been, and this bar would have come down, but it wouldn't have stopped you out unless you got nervous like I did this morning and push it up there a little bit. But if you hold true to that rule, 1 bar back, now it's making higher lows all the way up, and you just ride this thing up until it doesn't make any higher lows, or until you hit your limit order and take your profit. And that's your next position. All right. It's been about 30 minutes, and these markets have already given us about 4 or 5 trading opportunities. I took my first one, hit my daily goal, 555 at the end of the day, and I guess we'll cut her here, and we'll catch you on the next one. Make sure to subscribe and ring the bell, and we'll catch you next time. Thanks for coming by.